Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking this hour. Stock markets declined despite a 4% rally in Reliance shares as the conglomerate begins to unlock value, moves to acquire third-party stake in Reliance Retail at a hefty price, also sets July 20th as the record date for allocation of shares of its financial services arm ahead of its proposed listing. Foxconn decides to not proceed with the semiconductor partnership with Vedanta worth over $19 billion. Vedanta says it is fully committed to the semiconductor project and has lined up other partners without disclosing any names. The Mahindra Group needs to grow fivefold in the next 5 to 7 years to remain a growth gem, says Group CEO Anish Shah, points to a turnaround in the financial services business and a planned revamp of Tech Mahindra over the next 2 to 3 years. That's an exclusive. Mahindra Group will not dilute its stake in the electric vehicle business more than 2 to 3%, says Anish Shah. Adds that the group is generating sufficient funds and that they are not keen on too much dilution. Securities Appellate Tribunal refuses to grant interim stay on SEBI's restraining order against Zee promoters Subhash Chandra and Puneet Goenka. Gives them 2 weeks' time to file their reply. The market regulator had restrained Zee promoters from holding key managerial position in any listed entity. At least 22 people are dead after torrential rains lead to flooding in parts of North India. Met Department warns of more heavy rains in Himachal Pradesh, Uttarakhand, Punjab, Haryana, J&K, Rajasthan and Delhi over the next 2 days. Private equity player Bain Capital is eyeing control of ice cream maker Vadilal. Sources say discussions are underway and the ice cream business is valued at 3,000 crore rupees. That's an exclusive. Creditors to Jet Airways have called for the grounded airline to be wound up, informed the Supreme Court that the resolution plan approved by the Company Law Tribunal is not working and that the Jalan-Calroc Consortium has not infused any funds in the company. Karunanidhi Maran-owned Sun Group rejects reports of talks with SpiceJet, says there is no question of an amicable settlement on the payment obligation. Adds that they hope that the airline will comply with the Supreme Court order and pay the interest amount of 386 crores. Discussions on digital competition law draft in final stages. Experts suggest a wait-and-watch approach on ex-ante rules like Europe, which could impact investments and innovations adversely. Meta's Twitter rival Threads crosses 100 million users in just 5 days, becomes the fastest growing social media app so far. This growth is without the app being available in European countries. Well, let's begin with the day's market action. Sensex and Nifty perked up in opening trade but failed to hold on to those gains. In the end, Sensex ended in the red, losing about 60 points and the Nifty lost about 20. Bank stocks also declined in trade, but mid-caps saw sharper cuts. The mid-cap index lost nearly 140 points. Meanwhile, shares of Reliance Industries hit a 52-week high today as the conglomerate moved to unlock value. There were two major developments. The promoters are moving to acquire third-party shares in Reliance Retail at a hefty price. Meanwhile, the financial services arm is gearing up for its market debut. Sonia Shenoy is joining us now to explain why the shares are on a tear.
Well, Reliance Industries is undoubtedly the biggest gainer today and is very close to its all-time high of 2,755 rupees. First, let me start with the news. The board of Reliance Retail has approved a reduction in the equity share capital of Reliance Retail with a consideration of 1,362 rupees per share. Now, the other piece of news is that July 20th has been fixed as the record date for the demerger of Jio Financial Services. Let's try and understand the implications of both these pieces of news. Now, Reliance Retail's decision to reduce their non-promoter shareholding is a big positive for Reliance. Remember, brokerages had ascribed a value of 900 to 1,000 rupees a share in their SOTP, while the actual consideration is much higher at 1,362 rupees a share. Also, Reliance Retail's buyback is expected to be a precursor to the IPO, the eventual listing of the consumer business, and a part of a larger succession plan. As per Bloomberg's data, Reliance Retail's SOTP expectations ranged anywhere between 850 to 1,000 rupees a share, and this is a big positive. So, these are the brokerages that are up for you on your screen. There's JP Morgan, HDFC Securities, Daulat Capital, etc. Now, brokerages continue to be bullish on the stock. So, since we were talking about JP Morgan, let's get their view on board. They have an overweight with a price target of 2,960. They say that the valuations of Reliance Retail at $90 billion are sharply higher than the implied equity value at which the stakes were sold in RRVL way back in 2020. Let's talk about the other piece of news, which is the Jio Financial demerger. The Jio Finance demerger record date has been announced as July 20th, post which the company is likely to list. Now, the strength of Jio Financial Services also lies in the credibility of the people they have hired. Hitesh Sethia, as we know, has been appointed as the MD and CEO of Jio Financial Services. Sethia has a great track record. He has over 2 decades of experience in the financial services space, largely with ICICI Bank, which was where he served his last tenure before joining Jio Financial Services. Let's take a look at some numbers. JFS will be infused with 6% of Reliance Industries' treasury shares. This implies that Jio Financial Services will start with a net worth of $13 billion versus Bajaj Finance at $7 billion. Once Jio Financial Services is infused with the 6% Reliance Treasury shares, it will be the largest NBFC in India in terms of net worth. Back to you.
Market regulator SEBI has filed a 41-page affidavit before the Supreme Court in the Adani Hindenburg matter. SEBI has opposed some recommendations made by the expert committee. SEBI is not in agreement with prescribing timelines to conduct its investigations. SEBI argues that timelines can vary depending on the nature of the case. SEBI is also opposing the proposed overhaul of its settlement facility. The expert committee had proposed a robust settlement facility, but SEBI argued in favor of its current settlement rules, which have been in place since 2018. Well, the big corporate story, Foxconn and Vedanta have called off their semiconductor partnership worth $19.5 billion. In a statement, Foxconn said that it has decided not to move forward on the joint venture and termed it a mutual decision. Foxconn also said that it is working to remove the Foxconn name from what now is a fully owned entity of Vedanta. Vedanta also issued a statement saying that it remains committed to the semiconductor fab project, which is proposed to be set up in Gujarat. Vedanta said that it has lined up other partners but did not disclose any names. Minister for IT and Electronics Ashwini Vaishnav said that both companies remain committed to India's semiconductor mission and Make in India. Minister of State Rajiv Chandrasekhar said that decision will not have any impact on India's semiconductor goals. Government sources, meanwhile, tell us that both companies are likely to pursue their plans for semiconductors independent of each other with other partners. Meanwhile, no relief for Zee Entertainment promoters Puneet Goenka and Subhash Chandra. The Securities Appellate Tribunal has refused to stay SEBI's June 12th order. SEBI had barred the two from holding any key managerial position in any listed entity. Yash Jain joins us with more details. Yash, take us through this SAT order and what it means for both the promoters.
Well, absolutely. So disappointment coming in for both Puneet Goenka as well as Subhash Chandra as far as Securities Appellate Tribunal is concerned. In its order today, the Securities Appellate Tribunal essentially refused to stay market regulator SEBI's order, which restrained both of them, that is Puneet Goenka and Subhash Chandra, from taking any directorship position as well as KMP position on a listed entity. Now, this just does not concern Zee Entertainment, where Puneet Goenka is the managing director and CEO, but it also concerns the merged entity between Sony as well as Zee Entertainment, where Puneet Goenka is to assume the position of a managing director. Market regulator SEBI essentially based its case on siphoning of funds and diversion of funds. It said that 200 crores were lent by Zee Entertainment to about 7 entities. It was to be paid back to Zee Entertainment, but there were multiple layers of transactions which were built by the promoters of Zee Entertainment through which the money went out of Z Entertainment in multiple transactions and then came back to the same entity. Net result for Z Entertainment was nil. This was what SAT acknowledged before passing its order. Securities Appellate Tribunal has also asked both Puneet Goenka and Subhash Chandra to reach out to market regulator SEBI, file a reply in order to convince them that these transactions which took place were genuine transactions and not bogus transactions. That will have about 2 weeks' time, before which SEBI will be able to decide whether to vacate its order or to continue with that. Interestingly, the NCLT also heard the matter, which is the merger matter between the two entities, where the order has been reserved as far as that particular side is concerned.
Right, Yash. Thanks a lot for that. Here's a CNBC TV18 exclusive. Anish Shah, the managing director and CEO of Mahindra Group, says businesses across the group are firing on all cylinders. Speaking exclusively to Shireen Bhan, Anish Shah said that the group needs to grow 5 times over the next 7 years to remain a growth gem. Speaking about the EV business, Shah said that the group is well capitalized and is not actively looking for funding. But he also added that M&M may dilute another 2 to 3% in the EV subsidiary.
What we are seeing is all our businesses are starting to really fire on all the cylinders. We started with discipline and capital allocation. As soon as we had a good handle on that, we pivoted to growth. And what we are seeing is mega growth across many of our industries. We've got 4 core businesses in excellent shape. Our growth gems were started with a target of getting to $1 billion of market cap in 3 to 5 years. We saw that many are getting close to that target. So we took the bar up a notch higher, and we said that's not enough. Now we need to grow 5x in the next 5 to 7 years to remain a growth gem. There's a huge focus on technology and data. There's a tremendous focus on asset quality and ensuring that we maintain a very strong asset quality. And the results today bear that. We've had GNPAs in the 8 to 9% range in the past, went up to 16%. Today, they're in the 4 to 5% range. And it's not just where they are today, it's the actions taken to ensure they don't go high again in the future at any point when there's an economic shock. So these are things that are really enabling Mahindra Finance to start showing the strength it has, because the rural and semi-urban franchise that Mahindra Finance has is better than anyone else that we've seen around. We have never actively looked for funding in our EV business. Even when BII came in, we had discussions with them at that point on a variety of things across the group. And they were very interested in EV. And we said that we have enough capital. We are generating enough funds in our auto business. So we really don't need it right now. BII has come in with a 2.5 to 3% stake. And we may look at another 2.5 to 3% stake at some point in time.
Well, news now from the aviation sector. Creditors to Jet Airways have called for liquidation of the grounded airline before the Supreme Court. The creditors told the Apex Court that the Jalan-Calroc Consortium is refusing to infuse capital in the airline and that the resolution plan approved by the company law tribunal is not working. Meanwhile, the Jalan-Calroc Consortium continues to maintain that it is in compliance with the law and that liquidation is not permitted at this stage of the insolvency process. Supreme Court will next hear the arguments in 2 weeks' time. More action from the aviation space. Kalanidhi Maran-owned Sun Group has rejected reports of talks with SpiceJet. It clarified that there is no question of an amicable settlement with the airline on payment obligations. In a statement, the Sun Group added that they hope SpiceJet will comply with the orders of the Supreme Court and pay the interest amount of 386 crore rupees. Last week, the Supreme Court directed SpiceJet to pay the entire arbitral amount to its former promoter. Latest on the Go First turnaround bid, the resolution professional has invited expression of interest from potential buyers for the cash-strapped airline. According to a public advertisement, 9th of August has been set as the last date for receipt from interested parties. Reuters reported that the Wadia Group can potentially bid for the airline. Remember, soon after filing for bankruptcy, the airline's earlier resolution professional, Abhilash Lal, had said in a town hall that the promoters are committed to the company. Well, here's a CNBC TV18 exclusive. Bain Capital is in talks to buy ice cream maker Vadilal. Sources tell us that the ice cream business is valued at 3,000 crore rupees as per deal talks. Now, shares of Vadilal Industries surged after the news. Nisha Podar is joining us now with more details. Nisha, tell us, what are you picking up?
That's right. Sources with direct knowledge have shared with CNBC TV18 that Vadilal, which is a homegrown ice cream maker, has seen interest from a bulge bracket private equity firm, Bain Capital. This is what we gather from multiple sources with direct knowledge of the transaction there. We do gather that Bain Capital is interested in a majority controlling stake in the combination of Vadilal Industries, enterprises, as well as the Vadilal brand. Now, let me just explain the structure to you. Vadilal Industries is the manufacturer of ice cream as well as frozen food. Enterprises, another listed entity of the group, looks at marketing as well as sales of the ice creams, and Vadilal as a brand is a promoter entity. Now, earlier, Vadilal Industries had taken shareholder permission for buying out the brand from the promoter entity. So, a combined merged entity is what Bain Capital could be looking at buying, and would be looking at that particular controlling stake. And remember that the consumption story is something that the private equity firms have always been interested in, and that buyout trend has been really picking up, and we have seen many deals on those lines as well. So Bain Capital is in talks. We hear that the transaction may value the Vadilal's ice cream business over 3,000 odd crore rupees. But remember, word of caution there for the investors and minority shareholders. In the past, Vadilal Group has been in talks with upwards private equity vertical as well to sell stake in the company, and the promoter dispute had come in the way of finalizing this particular transaction. We reached out to the company. We didn't get any response on these deal developments. Of course, the stock has reacted very positively on our news break.
Well, with that, it's time now for a short break. But coming up, at least 22 people are dead after torrential rains lead to flooding in parts of North India. Met Department warns of more heavy rains in Himachal Pradesh, Uttarakhand, Punjab, Haryana, J&K, Rajasthan and the national capital over the next 2 days. Details when we come back.
कैसे करते हैं ट्रेड?
ट्राई 5 पैसा। Upcoming corporate action या news flow, किसका हुआ merger, कौन है नया CEO?
Financial data मिलेगा अब हाथों हाथ, fundamental analysis से अब बनेगी बात।
With 5 पैसा's in-depth company information, always stay up to date.
कैसे करते हैं trade?
सोच मत छोटे, install मार. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Well, here's the big national story today. Landslides, flash floods, waterlogged streets. Heavy rains have thrown life out of gear in large parts of northern India. Over 20 people have lost their lives so far across states. Himachal Pradesh has been the worst hit. Cloudburst triggered landslides and flash floods in the region. A red alert has been issued in several districts. Heavy rainfall wreaked havoc in neighbouring Uttarakhand as well. Water levels in several rivers were above the danger mark. Sachin Sharma joins us with the latest.
किस तरह जो यहाँ पर 82 दिन जो रौद्र रूप यहाँ पर जो धारण कर लिया और बाढ़ से हालात यहाँ पर जो बन चुका है, जिसके कारण जो भारी तबाही यहाँ पर हुई। हम इसमें खड़े हैं रामशीलम जो हनुमान मंदिर है और वहां पे खड़े और यहाँ की तस्वीरें देखिए किस तरह जो है बाढ़ का पानी जो है मंदिर में यहाँ पर आ चुका और जब पूरा मंदिर जो इसकी चपेट में आ चुका, जो भी सामान यहाँ पे था वो भी जो है ब्यास नदी अपने साथ जो है यहाँ से बहा के ले गई है। तो अगर मैं बात करूं अब तक की तो संपत्ति को काफी ज्यादा नुकसान यहाँ पे हुआ है। मनाली से कुल्लू के मध्य जो नेशनल हाईवे 3 है वो पूरी तरह से जो क्षतिग्रस्त हो चुका है। कई स्थानों पर जो पूरा का पूरा मार्ग जो है बाधित हो चुका है। इसके साथ ही जो रात की खबर है कि जो आलू ग्राउंड में जो 27 से 28 लोग जो वहां पर फंसे हुए थे उन्हें जो प्रशासन द्वारा वहां से जो है सुरक्षित वहां से जो है रेस्क्यू कर दिया गया है। फिलहाल जिस तरह की जो स्थिति यहाँ पर बन रही है तो ऐसे में लग रहा है कि आगे आने वाले 2 से 3 दिन और जो है मौसम यहाँ पर ऐसे ही रहने वाला है।
पिछले रात से कुल्लू में बिजली की समस्या पैदा हो गई है। पूरे हिमाचल प्रदेश में बिजली की समस्या पैदा हुई है। पेयजल की समस्या पैदा हुई है। सड़कें अवरुद्ध हो चुकी है। उनको खुलवाने का दायित्व अब प्रदेश सरकार कर रही है और जैसे ही बारिश रुकती है मेरा ये मानना है कि हम उन्हें युद्ध स्तर पर इन सब चीज़ों को कार्यों को पूरा करेंगे। तकरीबन 3 से 4 हज़ार करोड़ रुपए का अभी तक नुकसान आंका गया है और अभी भी बारिश जारी है। बड़े बड़े पुल बह गए हैं।
Well, meanwhile, violence continues in Manipur. One policeman was killed and nearly 10 were injured in an overnight clash in Kangpokpi. Over 150 people have lost their lives in the violence so far. Over 50,000 people have been displaced. The Supreme Court, while hearing a bunch of petitions today, said that the Supreme Court cannot intervene in the state's law and order situation. The court asked the petitioners to come back with constructive suggestions. Meanwhile, the Supreme Court refused to grant an interim stay on the ordinance that grants the centre authority over bureaucrats posted in Delhi. However, the court has issued notices to the centre and the Delhi Lieutenant Governor V.K. Saxena seeking a response on the petition filed by Delhi's ruling Aam Aadmi Party. The court will hear the matter on July 17th. Close to 40 people lost their lives over the weekend as widespread violence was reported during West Bengal Panchayat elections last Saturday. The Election Commission declared voting in close to 700 booths across 19 districts as void. The repolling was held today. There were reports of violence during the repolling as well. The centre has issued a notification to bring the Goods and Services Tax Network under the ambit of the Anti-Money Laundering Act. The move mandates that the GST network would have to share information with the Enforcement Directorate and the Financial Intelligence Unit under the Prevention of Money Laundering Act. The move will give the probe agencies more teeth in their crackdown on GST frauds.
The information sharing happening between the ED and the GSTN would strengthen the investigation not only in the hands of the GSTN providing the data to the state and the central GST authorities, but also the information which is available in the GSTN data would also help ED to investigate the case more effectively and trailing the proceeds of the crime and also attaching it and taking further action under the PMLA.
We want to make sure that the fair taxes are paid. We want to make sure that GST becomes the self-policing, pull factor kind of law that it was meant to be. I don't think that it necessarily should lead to harassment. It should lead to more quick identification of things that are going wrong.
Discussions on the need for a digital competition law is in its final stages. A high-level interministerial committee may take a decision on recommendations within a month's time. Now, the committee has spoken to various stakeholders, including content creators, app developers, and tech giants. The debate about whether India should consider going for ex-ante regulations at this stage is picking up. From big tech companies to smaller players, many stakeholders have raised concerns about such a move and its implications on India's fast-growing digital market. Shivani Bajaj brings us this special report.
The Committee on Digital Competition Law, formed by the Ministry of Corporate Affairs, is working on a draft Digital Competition Act. Even though the contents of the draft are not known yet, it is likely to be influenced by the European Union's Digital Services Act. While the European Union has notified Digital Services Act, which comes into effect in 2024, countries like United States, Australia, South Africa and the United Kingdom are also in the process of bringing in additional regulation for the digital economy. In India, the Parliamentary Committee on Finance had recommended a separate ex-ante law on the lines of European Union. Ex ante is Latin for beforehand. So legally, any law that comes into effect before the occurrence of a situation is called an ex ante law. So why are ex ante laws important?
When you come up with an issue like protection of privacy, if you leave that to an ex post regulatory system, then it's inevitably too late once there's a big data breach or something like that. So an ex ante rule, whether it's through a law or a code or a contract even with the companies, that they will protect consumer data in a certain way, that can be an ex ante provision.
While one view is that there is an urgent need for ex ante regulation, many experts believe that India's existing framework has enough safeguards to regulate big tech.
The CCI actually has enough powers today to be able to investigate digital economy companies, as is evidenced by the fact that they have over 25 ongoing investigations. Given that the CCI has that power, ex ante is not really needed, right? So neither is the EU model, the DMA, which is the Digital Markets Act, which is yet untested and hugely prescriptive. I think it will impact both investment and innovation adversely. Intervention should happen not in nascent markets.
Various stakeholders like the Internet and Mobile Association of India and 58 smaller stakeholders, including the Cyber Cafe Association of India, sent a representation to the MCA making a case against the ex ante digital competition policy.
If you look at our economy, we are not Europe. We want to encourage startups. We want to encourage entrepreneurship. So we should not bring in a blanket rule which can be detrimental. And do remember that ex ante regulations are very new. It has not been tried and tested. In fact, even in EU, the adoption would be from 2024. And there is also a concern which is raised that EU is not entrepreneur friendly.
While the debate continues on whether or not ex ante regulations should be brought in at this point, it remains to be seen if the Ministry of Corporate Affairs can bring the new law to the Parliament in the winter session this year, or would want more time for deliberations on the recommendations of the high-level Inter-Ministerial Committee on Digital Competition Law. In New Delhi, this is Shivani Bajaj.
Well, here's a quick look at the other headlines. Just 5 days after the mutiny, Russia's President Vladimir Putin met with the leader of the Wagner mercenary group, that's Prigozhin. A Kremlin spokesperson confirmed that the meeting was held on the 29th of June and lasted for about 3 hours. On the 24th of June, the Wagner Group mercenaries took over control of a city in southern Russia and marched towards Moscow before aborting their plans. Meta's Twitter rival Threads has crossed 100 million users in just 5 days, making it the fastest growing social media app so far. This growth is without the app being available in European countries. ChatGPT took about 2 months to reach 100 million users, while Instagram took 2.5 months to reach that mark. And before we wrap, South Korean car maker Hyundai has driven its smallest SUV into the Indian market. The starting price of the Hyundai Exeter is nearly 6 lakh rupees ex-showroom. The Exeter will go up against the likes of Tata Punch, Citroen C3 and others. Hyundai's Chief Operating Officer Tarun Garg expects volumes in the SUV segment to double in the coming year. Well, with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates continue right here on CNBC-TV18.